Good afternoon. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. With me to my left is my colleague Suyash Maheshwari. Suyash, let's talk about markets this afternoon. Hello, good afternoon. Markets showing some sort of rally this afternoon. It was a rebound, volatile session ending in Nifty settling above 20,000 mark.
Yes, Shweta. So we saw a lot of buying momentum in the late morning to afternoon trade, and the markets opened, as we were speaking earlier in the morning. The markets opened deep in the red, and the sentiment was that the worries in the global markets because of inflation, there was uncertainty, and most of the Asian stocks and the US stocks were trading directionless. But Indian markets was able to climb all walls of worry and buck the global trend in equities, and was able to rally for the majority of session. Now Sensex almost in intraday trade climbed above 67,500 levels, and it was just 54 points shy of its record high level. So maybe in the next few sessions we can see Sensex also at record high levels. And as you said, Nifty was able to close above the 20,000 mark for the very first time. Now we also saw a reversal in the small caps and the mid cap segment. Now they almost most of the stocks and the indices were trading with about 0.5% lower in the morning trade. We again saw a smart rebound in mid caps and small caps as well. The small cap index settled about 1% higher, whereas Nifty mid cap index was up about 0.4% in today's trade. Now another point that we need to mention is that India VIX, which is the volatility or the fear index, continued to climb for the third straight session, but it is still below the 12 mark, which suggests that the volatility in today's segment was lower than the last 30 days.
All right, and a lot of good news there coming in by the way of both mid cap and small cap rebound that we are seeing as of this afternoon. Joining us is Amit Gupta of FinTrek Capital. Amit, good to have you back. Talk us through what are the big expectations as far as Indian markets is concerned for the rest of the week, and how hopeful and optimistic are you that the rally will continue?
Yeah, hi Shweta, hi Suyesh. Thanks for having me. So I think market will just take a little bit of a pause to sort of adjust to whatever happened with yesterday's selling in the short term. My sense is that a lot of the mid and the small caps were running far ahead of the fundamentals, and it was very evident in the last 2-3 weeks of trading. That a lot of low quality stocks were also rallying without any major change in the fundamentals. So I think in short term, mid and small caps they see profit booking, and money can shift to much more safer large caps. As far as the long term story is concerned, I think India is very well placed for the next couple of years. There could be hiccups depending on when the interest rate cycles changes globally. And also we have elections next year, both in India and US. So a lot would depend on that. There are obviously going to be some corrections across the board. But given the India's strong macro, both in absolute and relative terms, I think the stock market should do well over the next 2 to 3 years.
Now, as you said, in the most analysts that we have been talking to, Amit, in the long term, they are extremely bullish about the prospects of India. But, after Nifty scaled 20,000, a lot of the analysts have turned cautious about the near-term prospects. What is your view about Nifty and large caps, especially given that from days low, the market has been time and again able to climb all walls of worry and end in the green?
Right. So I think, Nifty, 20,000 is not, it's a good number to, celebrate. But given the amount of profit booking which happened in the yesterday, and a lot of smart money was also taking out money even before the fall yesterday. FIs actually have been selling all through the August, even though the quantum was not very large. My sense is, just as a risk, mitigation purpose, we'll see some money moving from small and mid caps to large caps. The large cap heavyweights in Nifty, like, the IT space, may again see some sort of buying. In fact, in the last 2 sessions, even the yesterday's session when the markets were sharply down, we saw a lot of buying happening in IT. that has continued this afternoon as well. And my sense is this is going to probably continue for the next month or so till the earnings season again starts. Rest of the players, rest of the sectors, financials can again make a comeback. They haven't done much for the past 6-7 months. Obviously there was a concern about names topping out and stocks not doing so well. There could be margin pressures into the companies. But I think given the relative valuations of mid caps and large caps, and given that most of the mid and small caps were trading at quite an extraordinary premium, and the recent performance was very good, almost a 40% rally in small caps since March. So my sense is that people will move money to large caps, and that should hold Nifty well in the short term. Given that, I mean, there is no surprise from the global markets.
So just to put it very clearly, we can expect Sensex, which was just about 50 points shy from its record high levels, can it scale the record highs this week?
I don't know this week or next week, but I think the trend for Nifty, it's sort of up. It's still in a bullish mode till it does not, violates 19,700 levels on a closing basis. I think the trend is up, and we could see high levels as far as the 20,400 and 600 also probably this month, by the end of this month. So my bet is IT and financials would lead that rally, and we'll see small and mid caps consolidate and Nifty, taking the bait and going forward from here.
All right, and before we move to sectors and stock specific action this afternoon, I also want to understand your view on the macros. Inflation data came out yesterday. Surprising to many, inflation is still under control, just a few points outside of this 4% plus minus band of RBI. What is your outlook as far as inflation is concerned? Is that likely to move markets in the coming weeks ahead?
So I think crude has become a bit of a worrying point from a short to medium term. I mean, seasonally we are moving into a quarter which is very positive for crude prices, and seasonally very a lot of churn happens in the crude markets. In the September monthly oil market report, OPEC has also said that the global oil markets would face a supply shortfall. So I think that could be a partly reason why crude prices are rallied. In fact, they have rallied almost 20% in the past month or so. So my sense is that is a pain point. Apart from that, the monsoon in India has been very partially problematic, because there have been parts where you have got a flood kind of a situation like Himachal or Uttarakhand, etc., and even in northeast part of India. But then there are states like Maharashtra and Karnataka where you have a drought kind of a situation, and a lot of the crops, especially in cotton and sugarcane, are facing output shortage. So my sense is it will take couple of months to settle all this down. Whether it's going to move the needle for RBI, that is something to be debated upon. But as of now, I think they'll continue to hold the rates and not increase it. But yeah, we have to watch crude oil very closely in the next few weeks.
All right, and crude oil, of course, above $93 a barrel. What are you expecting as far as price momentum in crude is concerned? Do you think it's going to further inch up, or is this it? Is this where it's likely to stay in the range of $92 to perhaps $95 a barrel in coming months and weeks ahead? A lot depends on crude prices, come to think of it.
Yeah, right. I mean, technically, we can have another 10% or so rally in the crude prices, so we can easily see close to $100 on the crude. I'm talking about the Brent crude. Obviously that would probably make markets a little jittery, because again that changes the inflation equation. Last year also, when the oil prices were rising among the various sanctions and the Russia-Ukraine war, it sort of hit the market sentiment quite a lot. So if that happens, then market can be in a spot of bother. But I mean, as far as right now is concerned, given how the Chinese economy is holding up and things improving in Europe as well, my sense is the worst case scenario could be $105 maximum.
All right. Does that mean that there is more demand for crude? Because in the last a year or so, OPEC countries had consistently cut down production, but that did not result in prices stabilizing. There is some demand now, uptick in demand of crude due to Chinese recovery, various other factors, US recovery as well. There's more demand for crude in the US. Do you think the demand is picking up? Is that the reason why crude prices will inch up to $100 per barrel?
Yeah, I mean, it's a combination of basically a slightly better demand in China after the lockdown and also, European economy recovering. But it's also because, the US strategic reserves were at a 40-year low. And with the rising demand, the government was basically running out of options to curtail the price rise. They have been actually selling from their reserves, what we call it SPR reserves in US. They have been selling, but that selling got over in July, and as soon as that selling got over, we saw a jump in the price. So I don't think they'll start. I mean, they have to construct the reserves again, and that could increase the prices to even $100 and $105. But yeah, I mean the demand is back, and combination of higher crudes and higher interest rates could have a significant impact on the economy.
I mean, it could be a very big bummer for the markets.
Absolutely.
If crude price do surpass the $100 mark, it could have implications on the inflation rate, the repo rates, also on the rupee, which is at near record lows. So it could be a major mover for the markets, Amit.
So I think, I mean, short-term move to $100 should not be a problem because usually the contracts are 3 to 6 months ahead booked already. So even if it goes to $100 in for let's say 3 months, it's not a problem. In fact, in RBI projections, they are taking $85 as a base rate. So I think 3 months is not a problem, but if it goes there and sustains there, then it will start hitting the margins of all the companies because usually all the corporates book out at least 3 to 4 months in advance.
All right. So next 2 to 3 months crucial to watch out for as far as crude prices and the crude basket is concerned. Let's also quickly talk about top sectors that we are tracking this afternoon, Suyash.
Yes, Shweta. So amid a recovery in the broader market indices, we also saw a recovery in across the sectors. If you see today's price performance, Nifty Auto and Nifty IT were the only sectors that indices that ended in the red. Now today's rally was primarily driven by banking and financial stocks, and if you remember, we were also talking today morning that the valuations of mid cap and the small caps do seem stretched, but banking index, if you look at the 1 year forward PE, currently it is below its historic average, right? So banking and PSU banks and Nifty banking
Am I looking
stocks.
that number correctly? Is it 4.32%?
4.32% in today's session, but we also need to understand it's on the back of profit booking, because of which the Nifty PSU index was down about 2.38% in yesterday's session. So there was a brief pause in the rally in the banking stocks, because as we know that banking stocks were very late to join, in the 7-day run-up which took Nifty to record highs. Nifty Bank has only been rallying for about 3 out of the last 4 sessions, and currently it is just about 100 points shy of the 46,000 levels, about 600 points shy of the all-time high levels. And given the fact that the valuations also, I mean, if you look at the 1 year forward PE, Nifty Bank currently is trading below its historic average. So maybe it could bode well for the banking stocks and provide that impetus for the Nifty and the Sensex to, scale new highs, because remember, Shweta, the banking and the financial stocks contribute to about 38% of the Nifty pack.
Okay.
So it could be a big driver for the markets going forward.
All right. So is Nifty and banking stocks contributing, and financial stocks, of course, making up for majority of Nifty and its values. I want to understand, as far as PSU banks is concerned, it's a major market mover at 4.32%. Amit, what is your outlook on PSU banks? We've discussed here PSU banks giving very good returns, in fact, and that has been the case and pointed out not just by a lot of people who've joined us, also Prime Minister himself, who actually vouched for PSUs.
Stocks.
Yeah, it was a statement made in jest, but a lot of investors is taking that statement very seriously. So my sense is, it's a more of a technical breakout which is happening in a PSU banks. There is also a case that a lot of these PSU banking stocks, especially the bottom 50%, I would say the UCO Bank and the Punjab Sindh Bank, Canara. Apart from the top four, I would say the rest of them are actually very under-owned. Nobody owns them in the funds also. Whether it's a mutual fund space or the PMSN and the AIF space. And all the stocks are doing well on the important matrices, whether it is NIMs or net interest margin or the asset quality as well. Given that it has already rallied, I think the case of fresh investments and a big investment is a little less at this point of time. But the broad uptrend remains in place. At some point of time, I think this would change to from PSU banks to private banks.
Okay.
But the banking industry is backbone of every economy, and given that India is expected to grow strongly over the coming years, banks have to play an important role in that.
Amit, I also want to quickly touch upon the auto stocks. Now, yesterday they were in the news amid confusion that whether there will be an additional GST, 10% GST on diesel vehicles. Now, Hyundai and Maruti yesterday came out saying that they expect the percentage of diesel cars in the passenger vehicle segment to decline. And if we look at the historic numbers also, Shweta, in 2013 and 2014. Diesel cars attributed to about 53% of the entire passenger vehicles segment. Currently, it's less than 20%. So, do you see that there could be some pressure in the auto segment, given that they have been the primary drivers of the recent rally since the start of the financial year, and specifically companies that are involved in making diesel cars?
I think it's a sort of a decadal theme to shift from petrol diesel to EV or even CNG cars. I don't think no company has said that they are going to stop making diesel cars for the next 10 years. So there could be additional GST to improve that improve that conversion happening. But I don't think anything is happening quickly. The 10% GST was also a one-off statement. You also know that GST has to go through a council. Just giving out a letter to the finance minister does not mean a GST would be put. It has to pass through the GST council, and given that we have elections next year, I think the probability of that passing is very low at this point of time. Over next 7 to 10 years, that is the trend which we are going to see. I don't think companies are ready
come to think of it,
make that.
Come to think of it, since you talked about a decadal transition, come to think of it, Maruti has already discontinued its diesel cars in 2019. There is a huge shift, as my colleague Suyash, and he pointed out numbers as far as diesel fleet is concerned, and the reducing size of diesel fleet year on year, decade on decade. You are correct when you say EV is the new game, CNG is the new game. It's going to be either hybrid EVs, etc. That, of course, are the new trends that we're picking up in the auto sector, but the decadal shift seemed to be pointing towards moving away from diesel vehicles. In fact, it's interesting to point out that Nitin Gadkari, the Road Transport Highways Minister, after making that statement of proposing a 10% GST on diesel vehicles, later retracted that statement in a way by saying that there is no official proposition or proposal just as yet. So hold your horses, it's not happening anytime soon. But by the time he made that statement, remember, M&M and Tata stocks had already took a beating. So there was an immediate impact on at least two companies that are leading the game when it comes to diesel fleet, Amit.
I think the statement was probably made off the cuff, and market reacted in the short term for that. M&M Tata Motors have a huge component, more than 50% coming out of the diesel space. I mean, it's not a surprise that these two companies are investing maximum in the EV space because they know that eventually this would come, whether it is in the form of additional GST or additional taxes, eventually, it will come. And that's how, they have to start making the shift now. I mean, it is also interesting that, China started, 10 years ago, China actually started this trend by putting additional taxes on the diesel vehicles. There were long queues and long processing to get the diesel vehicle. So, people automatically shifted to EVs very quickly in China. So I think that they have taken the clue, but I'm not sure, given the election season, this is the right time to do it. Probably next year, it could be a dampener on the auto stocks.
All right, could be a dampener on the auto stocks if diesel vehicles and the taxation on diesel vehicle perhaps goes up next year. It's not happening anytime soon. That's the word. That's the final word, in fact, coming in from the Minister of Road Transport and Highways. But moving on to another important set of stocks that we are tracking is sugar. Sugar output in India's top producing state, Maharashtra, is likely to fall 14% in 23-24 crop year. Now, to its lowest in 4 years due to lower cane yields following the driest August in more than a century. According to media reports, the reduced output could add to food inflation and discourage government from allowing sugar exports, further increasing global prices, which are already, remember, near their highest in a decade. Higher domestic prices will, however, improve margins for producers. So, Balrampur Chini, Dwarikesh Sugar, Sri Renuka Sugars, Dalmia Bharat Sugar could make more money if they are able to shore up their revenue. Let's quickly understand what's happening as far as sugar is concerned. With me, joining is my colleague Krishna Kumar in the studio. Krishna, before I go to our markets guest and perhaps talk about the impact on stocks specifically, we are looking at yet another crop item, this time sugar, an essential commodity at that. Its yield is perhaps going to hurt India, specifically because Maharashtra is the biggest producer of sugarcane, right, and the yields are decreasing.
Right, and that's happening because Maharashtra incidentally makes 1/3 of India's sugar output, and it has witnessed its driest August in a century. It's the lowest rains that Maharashtra has received for the month of August in a century, and that means that it will produce its lowest output in 4 years, which means for the year 2023-2024, the output is said to be around 9 million metric tons.
Okay.
Whereas compared to the previous year, 2020-23, that output, the total India's sugar output was 10.5 million metric tons. So it's going to be around 8% lower than last year. But bear in mind that Maharashtra is known globally as a sugar producer, as a state, for having wild swings in sugar production. Because if you take it back even a year further, in the year 2021-22, India produced nearly 13.5 million metric tons of sugar. So from 13.5, we've gone down to 10.5, and now we're going down to 9. So that's what's actually happening, and that's because of a very dry spell in monsoons, and even as we speak, the September rains are being tracked as well. If September, India is set to receive average rainfall from what we understand, and if Maharashtra too gets its average rainfall, the crops can be saved. Otherwise, Shweta, the problem is that a lot of crops are at the risk of being destroyed.
Absolutely.
Because of the dry spell in August. It's sugarcane crop. It requires a lot of water. Bear in mind, it doesn't, it's like rice. They are high water consuming crops, and that's what the problem is. A dry August is what has caused this problem as far as India's sugar output is concerned. A dry August in the state of Maharashtra, which produces 30% of India's sugar.
All right, and then there's going to be a direct impact, in fact, on stocks,
yes,
and a positive impact at that. Amit,
Shweta, if I can jump in over here.
Yes, absolutely.
The stocks have been rallying for a while now. Like last week, there was news that Avalene, which is the world's largest trader of sugar, said that there could be supply shortages because of which the stock ran up 10%. Now, traditionally, if you look at economics, when the supply decreases, the expectation is that the prices will move up. But sugar being, and Amit, please correct me if I'm wrong, sugar being an essential commodity, I don't think a lot of the, the companies can command higher prices. So the fact that these stocks are rallying is a bit of an anomaly. Amit, please fill us in.
What's happening? Why are the stocks rallying despite a fall in output?
Yeah, so I think, as you have, Krishna has also said that, the Maharashtra has surprised us all. There has been almost a 60% lower rainfall. So, I mean, there have been just not been ample rainfall during this crucial growth phase. And that has led to, a reduced output. This could again, add to food inflation and discourage the government from, allowing sugar exports. And the global prices are actually at almost, at a lifetime high, more than a decade, their highest prices. So that highest domestic prices will actually improve the margins for the producers, because you're getting better prices for your yield, from the farmers, and then they are able to make payments on time to the farmers. So my sense is that that's where the stocks are rallying, because the market anticipate that there will be a ban on the sugar mills from exporting sugar in the season come October. That would halt the shipments for the first time in many years, and as a result, the stocks are sort of celebrating that.
All right, and
Amit, just to clarify, these companies can increase prices, and we don't expect any sort of a cap when it comes to sugar prices. Is that so?
I mean, it's not up to them to increase the prices. Eventually, the government has to see what is the balance. So usually, the crushing season, which starts in mid-October, usually they take a call then. But now the crushing season has got a push by about 30 days. So I think they'll make a decision closer to mid-November, around Diwali or just before Diwali as well. Yeah. I mean, we have to wait and see on that front.
More than the rising prices of sugar, what worries me is yet another administrative measure that perhaps the government of India will have to take by banning export of sugar, which has been the case in case of rice as well, where in order to meet its own indigenous demand, the rice exports, non-basmati rice exports, had to be banned in order to shore up our own buffers, which is going to be the case now in case of sugar as well. And so therefore comes the charge, especially from Western countries. Look, India is exporting inflation to the rest of the world. I mean, we don't have much of a choice, do we?
Well, when we are dependent on the monsoons for how the final crop and the produce comes along, so it's a toss, it's a coin toss. So the West can cast aspersions, but we are acting as per market dynamics. Market dynamics says that if supply is low, prices go up. Prices go up, profitability goes up. Profitability goes up, it's good for the companies, and if it's good for the companies, it's definitely good for the stocks out there. So that's a simple equation. But what the government does by intervening and by banning exports is ensuring that it takes care of its own first. You have to take care of prices. Nobody is going to like it if sugar prices go through the roof in this country. I mean, sugar is such an essential commodity that it's not even like tomatoes. When if you want to give a pass, you can give a pass. You can't give a pass to sugar. So the fact that government wants to step in, and I think Amit, if I'm inferring from what he's saying, right, the rise in the sugar stocks sort of factors in the fact that they are expecting government to cut down on exports of sugar. So that seems to be an eventuality the markets have factored in already.
All right, and higher the margins, better the stock prices, which is what's happening right here as far as all sugar stocks is concerned. But I think moving a bit away from sugar stocks to stock-specific action on Dalal Street this afternoon, run us through the stocks that you're tracking, the top gainers and losers, Suyash.
So, Shweta, Coal India has made an entry again among the top gainers. It saw some profit booking in yesterday's session, and in fact, it was among the top losers in the Nifty pack. Now, Coal India surged almost 3% in today's trade after the company said that it plans to invest nearly 25,000 crores on 61 first mile connectivity projects, which will boost the eco-friendly transportation of coal. Grasim was another stock which in fact there was no news trigger, but the stock has been in focus lately. The stock has surged about 5.5% in the matter of 5 days or so. Bharti Airtel is another stock that we were tracking. Several, brokerages came out and, they have raised the price target on Bharti Airtel stock to about rupees 1000, and as a result, the stock was able to climb about 2.76% in today's trade and touched a record high level. And other stocks that were in focus today among the blue chips was Tata Consumer Products and Titan. Now Tata Consumers, as we know, has been in news lately. The initial buzz was that it will acquire a majority 51% stake in Haldiram for 10 billion. The company has come out and denied those rumors. So we have seen some buying and selling action in Tata Consumers. Titan, of course, as we know, the story is the stock always is in the news, and it was again among the top gainers today. Now looking at the top losers, Shweta, if you can pull up that chart, HDFC Life, Mahindra and Mahindra, again a diesel producing company.
Is that the trigger?
Ports, perhaps it could be, because if we see the auto index was among the only sectors that closed in the red. It was down about 0.3%, whereas all the sectors barring again Nifty IT, which also saw some correction, ended today's session in the green. Now you can see HDFC Life, Adani Ports, L&T, Cipla, Mahindra and Mahindra, all stocks were down about 1 to 1.5% in today's trade.
All right, and those of course are big stocks that we continue to track here. Coal India is surprising again and again. What's moving the Coal India stock?
So Shweta, the first trigger was that when it came out with the numbers, it had a good set of numbers in the previous quarter's earnings report. Then the company said that in August the production jumped about 13%. Now it's planning to make a capital investment of about 25,000 crores to boost the eco-friendly transportation of coal. So a lot of triggers, and then we are seeing a broader demand for coal and a broader rally in PSU stocks. Also another factor is that once there are a lot of indicators, macroeconomic indicators are suggesting that we are on a path of recovery, and when we are on a path of recovery, energy stocks usually tend to rise, as we are seeing in the case of crude. It has surpassed $93 a barrel. So also coal prices, and Coal India, being a producer, being a mining company, has also seen some of that effect, that rub-off effect.
All right, and another stock that we are tracking this afternoon, it's surprisingly so, Blue Dart. Blue Dart stock was up about 3% in today's trading session. Blue Dart, remember, rebranded its premier service in India from Dart Plus to Bharat Dart. Now, the timing of this rebranding is quite interesting. It comes amid an ongoing debate in the country on the name India versus Bharat. Now, Blue Dart's shares, as I said, jumped 3% after the company revealed the new name. Bharat Dart is going to be an extinguished service of Blue Dart, which will be known for its speed, security, careful handling, hence the premier service. Let's also quickly take our viewers, we will take our viewers through what the debate around Bharat versus India is, but let's also quickly take Amit's views on it's a significant announcement, of course, Amit. I want to quickly get your views on this rebranding effort. The timing is interesting. We all know that there's an ongoing debate. We all know that the government is proposing Bharat perhaps to be the new nomenclature, although both are synonymous to one another. But that moving the stock by as much as 3% is surprising on many counts.
I think we should not look for logic in each and every move in the market. I mean, some people might get very patriotic hearing that and might buy the stocks. So I don't think that's a sentimental kind of a move, not really backed by fundamentals.
All right. No,
not everything is backed by logic.
Yes. Add to Amit's point, it seems like it was just because of a push, because of the name change, because companies' operations are not improving, Shweta. When was the last time you guys bought a product or availed a service because you like the name of a product or a company, right? So operations are not improving. So perhaps this was just a sentimental push for the stock. Also, one of the things that when I was reading this report, Blue Dart said that it decided to rebrand the premium line after extensive research.
Okay.
Now, was it on the back of extensive research, or PM Modi's name being written with a play card of Bharat in the G20 summit?
Yes.
Anyone's guess, right?
All right. Anyone's guess?
Looks like we're not guessing. Looks like we're inferring something from all that we've seen so far.
A lot of inference there, and before I move away from this conversation, it's interesting. There is an ongoing debate here. You cannot be ignoring the elephant in the room.
Oh,
Krishna.
definitely not.
But there is an ongoing debate on India versus Bharat, and as I said, India that is Bharat, or Bharat that is India. They're one or less similar, same, one sentiment, one people, one country,
Right.
but it's about the name game, and the name game is being discussed to a point where the pictures of Prime Minister at G20 with the placard was in fact headline news for a lot of people.
Right, it's all timing. Obviously, that placard came at a time when there was already news out that in the special session of Parliament that's going to be beginning on the 18th of September, there is going to be a bill that's going to suggest or ask for the renaming of the country from India to Bharat. So yes, it's a name, and for a brand that's looking to reinvent itself in the Indian market, you're looking at a country that's reinventing itself on the global stage, and it wants to reinvent itself with another name. We've renamed some of the biggest metropolitan cities in this country.
Okay.
Maybe it's time for the country itself. Who's to say? I will, hold my horses and hold my peace until the 18th of September of a new session of Parliament to convene to see if this bill is actually going to be introduced. Because until then, if you ask me, all of it is a lot of optimistic talk, and that's about it.
Okay.
Because it's reports say that.
Absolutely.
We will know it when the special session of Parliament convenes on the 18th of September, Shweta.
All
But
right.
then it's
We'll
just
know.
not a name change, it comes at a huge cost. You have to change the name.
Yes, the cost
at
of changing a name.
In every documentation.
Not the passport.
but there's going to be a huge cost to it, and if and when that happens, we'll bring you the cost analysis.
Yes,
But shifting
definitely.
away from India to US inflation data for the August, the CPI data is scheduled to be released today as per US timing, so we'll get it midnight today, perhaps at some time. Now, inflationary pressure in the US seems to be gathering steam. US inflation was recorded at 3% in June, rose to 3.2% in July of 2023. The market consensus is that the annual inflation rate in August will be 3.6%, registering a second consecutive month of rising annual inflation. The year-on-year consumer prices have fallen from 9.1% in June of 2022, but are still very, very far away from Fed's inflation target of 2%. Inflation continues to be a cause of worry in the US, rate hikes after rate hikes. Today is going to be that crucial important date on which FOMC and its decision to perhaps pause the rate hike or continue with the rate hike cycle will be decided, Suyash.
It is very crucial, and as you can see in the last two sessions, the global markets themselves have poised. We are not seeing much of a directional movement in global equities. Now, this is on the back because if there is a positive or a negative surprise as far as CPI based inflation in US is concerned, if there's a negative surprise, maybe FOMC could be forced to raise interest rates because the economic numbers that are coming out from the country show that the macroeconomic output is increasing, the demand is coming back. So given that the economy is also overheating, FOMC can make a case for a rate hike. But as of now, from what I am picking up, Shweta, as far as the inflation, as you rightly mentioned, the inflation numbers are expected to rise for a second consecutive month, expected to come about 3.6%. And if there is any beat, unless there is a beat or a miss on that regard, FOMC should pretty much hold the raise. At least that's what the market's expectations are.
All right, let's quickly also get in Amit's perspective. Amit, what happens overnight while we sleep? Let's say the numbers do not come in line with the expectation. Are we looking at a direct impact on the US stock markets and perhaps a resultant impact on Indian stock markets tomorrow morning?
So I think the Fed is unlikely to, brush aside any significant increase in the energy cost. The crude prices, everybody knows that has been going up in the past few weeks. But the X, core, which is X energy and X food, that is, I think, is declining at a steady pace, and that is also, expected to again, go down. So I don't think this would really change the outlook for the Fed meeting next week, which is almost 97-98% that they are going to stay on hold. So I think the outlook for the FOMC meeting, either this meeting or the next meeting, that is not going to change significantly. It could play a role in determining the market confidence on the Fed outlook for the next year, because investors were rather convinced that we'll get a rate cut sometime around in March of next year. But I think now the expectation is that the rate cut would happen sometime in June only. The main
Okay.
reason for that is that the US economic data continues to hold up, especially the consumption activity. As long as though the employment conditions are not deteriorating very rapidly and inflation data continues to go down with a slowing trend, it would not go to 2%, but still if it's on a downtrend, which is not too fast, then I think the Fed has all the right settings to go, with the same rate cycle till
Okay.
for next 6 months or so, and then take a call on the rate cuts.
All right. So the call on the rate cuts would be taken with the data that will be emerging this month and perhaps in the next couple of months. Amit Gupta of FinTrek Capital, thank you very much, sir, for taking time out. Thank you for joining us this afternoon. And moving away now, lenders, including banks, will now have to pay borrowers approximately 5,000 rupees every day if there is a delay in release of property documents. The Reserve Bank of India on Wednesday, September 13, issued a directive requiring regulated entities, including banks, NBFCs, ARCs, LABs, co-op banks, among others, to release all original, movable and immovable property documents within 30 days after the full repayment or settlement of loans has been made. Failure to comply with this directive will result in a penalty of 5,000 rupees a day for any delays in the release of these very critical documents, the central bank said in a directive, bringing joy and cheers to perhaps a lot of consumers who have to go back to banks, follow up consistently over a period of time to get their mortgage papers back. Krishna, this is a good news for consumers specifically who by now and for months and months and years had to wait for their mortgage document, their property documents, to get a hold of that property document after the full repayment of loan has been made.
Right, and this coming from from RBI themselves is a great move, mainly because it makes properties of buying and selling and holding on to properties that much more easier in these already troubled times. So a directive from RBI, and the main point here is that it comes with a penalty. Now these institutions are now being made responsible to ensure people like you and me, the consumers out there who are buying and selling property, get their documents in on time. And this is in that sense RBI saying that this is unforgivable, and that now these it's up to the NBFCs, it's up to the financial institutions to buck up, to really pull their socks up and start delivering on this matter. And you are talking about a situation where, what will these companies, these NBFCs and banks do if you don't repay the loan? They will send somebody to pick up pick up something from the house. If you get a car loan and you don't repay your installments, say somebody will come and pick up your car and take it away.
Absolutely.
So and here you are, people who have repaid and still waiting for documents to come their way. So clearly there was a balance mismatch over there in terms of expectations and delivery. And this is RBI actively entering the picture and making a huge statement by putting a 5,000 rupee per day fine for duties that they should be completing on a daily basis.
Absolutely, and you correctly pointed out an imbalance therefore has been corrected by way of a banking reform that was much needed. I think what stood out for me in that circular was either you give a reason for why you are delaying releasing of papers, or you give that penalty to the customers who've been waiting for their property papers. And on top of that, not just reason, you've got to be accountable for what you hold. Therefore, if you lose the papers, help your customers procure duplicate copies.
Right.
I think that also is a problem that many people have been facing over years, where banks, sometimes co-op banks and local banks, end up losing physical movable, immovable property papers, after which you've got customers going pillar to post to get their papers. Now banks will have to help them out, get a copy or duplicate copy of that paper.
It's placing the accountability clearly on the part of the financial institutions, banks or NBFCs, or as the case may be, a cooperative bank, private bank, public sector bank. any bank that you talk about, any cooperative bank you talk about, the responsibility is on them to ensure that the borrowers get their documents on time.
Right.
And more importantly, in instances of documents being lost, it again becomes the responsibility to make sure those lost documents get replaced, because bear in mind the customers need those documents for their future going forward, and how many more commitments they have based on those documents that they need to get, we don't know. So we can't be in waiting for Godot. For these documents to come our way.
Absolutely, and essential banking reforms, as I said, RBI has, sort of kicked into motion, perhaps will help a lot of borrowers, a lot of customers out there. But with that, it's a wrap on this bulletin. We've run out of time. Thank you very much for watching.
BrahMos, stealthy, lethal, precise. It flies at 3 times the speed of sound and cuts through a warship like a hot knife through butter. China's navy has threatened its neighbors, and they are turning to the BrahMos for protection. The warship killer. This and more streaming on world's first news OTT, News 9 Plus. Download now.
मैं इस वक्त इराक़ के करबला शहर में मौजूद हूँ। इराक़ का करबला शहर, जिसके बारे में सुना शायद हो आपने बहुत बार, जब भी आपने शिया समुदाय से जुड़े हुए, उनके मातम से जुड़े हुए, उनके तकलीफ़ से जुड़े हुए किसी भी बात को सुना होगा तो आपने करबला शहर का जिक्र ज़रूर सुना होगा। तो करबला शहर की सिग्निफिकेंस शियाओं के लिए बहुत ज़्यादा है, लेकिन इस शहर की सिग्निफिकेंस पूरी दुनिया के लिए